A bug puts $162 million up for grabs, says the founder of DeFi platform Compound. So this is going to be a pretty interesting story. So we thought the carnage was over for popular decentralized finance, or DeFi, staking protocol Compound, but as it turns out, millions more than we thought are at risk. About $162 million is up for grabs after an upgrade gone very wrong. Founder of Compound Labs. So from Robert Leshner, when the drip function was called this morning, it sent the backlog 202,472.5, about 2 months of comp since the last time the function was called, into the protocol for distribution to users. This brings the total comp at risk to approximately $490,000, of which 136,000 is still in the comptroller, and 117,000 has been returned to the community so far. Thank you. So the price of Compound's native token, called Comp, is down about 4.8%, and at first the Compound chief there was a cap to how many Comp tokens could be accidentally distributed, noting that the impact is bounded at worst 280,000 Comp tokens, or about $92.6 million. Okay, but on Sunday morning, Leshner revealed that the pool of cash that had already been emptied once had been replenished, exposing another 202,472.5 Comp tokens to exploit, or roughly 66.9 million at its current price. As the biggest ever fund loss in a smart contract incident, but investors, for their part, don't seem to care all that much. So if you tally the initial 80 million, the $22 million already claimed after the drip, and the $45 million currently at risk, the bug tallies to $147 million, making it officially the largest fund loss in a smart contract incident. The crypto market shrugged off the largest ever fund loss as if it was nothing, said Madit Gupta, a core developer at decentralized crypto exchange SushiSwap. The future for DeFi is bright, but we're in uncharted territory and there's a lot to be learned still. So DeFi protocols such as Compound are designed to recreate traditional financial systems such as banks and exchanges using blockchains enriched with self-executing smart contracts. So on Wednesday, Compound rolled out what should have been a pretty standard upgrade. Soon after implementation, however, it was clear that something had gone seriously wrong, and once users started to receive millions of dollars in Comp tokens. For example, $30 million worth of Comp tokens were claimed in one transaction. The saving grace of the entire debacle, however, was the fact that the pool of cash that was open to exploit, something called the comptroller contract, had a finite amount of tokens. The problem is that this leaky pool got a fresh influx of cash, and 0.5 Comp tokens are being added roughly every 15 seconds, according to Gupta. So Lester noted that this brought the total Compound runs. There are a few proposals to fix the bug, but Compound's governance model is such that any changes to the protocol require a multi-day voting window, and Gupta said it takes another week for the successful proposal to be executed. So in the meantime, this pool of cash is once again up for grabs for users who know how to exploit the bug. So Compound made clear that no supplied or borrowed funds were at risk, which is some consolation. No user funds are or were at risk, so it's not that big of a deal, said Gupta. Everyone kind of got diluted but didn't lose anything directly. There were also some white hats in the community. So after the Compound founder begged users to voluntarily return the platform's crypto tokens, some did. Leshner said that as of Sunday morning, about 117,000 Comp tokens, or $38.7 million, had been returned. But as Matty Greenspan, portfolio manager and quantum economics founder, points out, how things play out with this bug is almost entirely beside the point. The bigger issue is, can it happen again? So Compound is the world's 5th largest DeFi protocol with a total value locked of $10.3 billion according to DeFi Llama, which provides ranking and metrics for DeFi protocols. So Greenspan said the protocol can easily absorb this loss and a lot of it will likely be returned, but the larger issue would be if people lose confidence in the system's ability to function properly. And Gupta said one immediate problem is that the comptroller account has given away comp tokens that were reserved for future rewards. So you can think of comptroller as the heart of Compound, and Gupta explained it facilitates all core features like borrowing, lending, and rewarding. Comptroller oversees the pool of cash used to pay rewards to users who provide their crypto to borrowers at a set interest rate, which is typically a single-digit APY. So future rewards might have to be reduced to make comptroller solvent, said Gupta. So, I mean, feel free to give your thoughts if you stumble upon this, but the thing that you really got to understand about this, like, I think cryptocurrency is pretty cool. I think it's an amazing technology, but do you always run risks of something like this happening? Meaning, if you are going to go and get involved with cryptocurrency, make sure your financial foundation is strong to the point where something does happen with the money that you put into it, is not going to actually change your life, right? So what we mean by this is getting out of debt, building an emergency fund, and having your money automatically invest for your future so that any spare cash that you just want to do for fun, you could put towards like these cryptocurrency types of exchanges and projects and all that kind of stuff, right? Like kind of fun money that you can be 100% okay with just losing and not really care about it at all. That's the way that you really got to think about it. So if you want to learn how to get out of debt and manage your money so that you could be in a position of strength to be able to invest into things, something like this, where it's not going to hurt you if something goes wrong, but it is going to help you if something does go right, right? You know, the whole same thing with, you know, Bitcoin, Ethereum, Cardano, even Dogecoin, right? If you were in a position where you could just toss fun money at those things at the perfect time, you could potentially basically become a millionaire or even a billionaire in the case of Bitcoin. All if you had money that you could just toss into things without it actually affecting you, right? Because like imagine if every single month you had like a couple $100s or a few $1,000s every single month that you could literally just toss into different projects and not care about it. Not care if you were to lose it because it will have zero impact on your life. You want to get yourself to that point so that you have the freedom of options, right? The more options available to you, the more likely you're going to end up hitting a winner, right? Now, we're not suggesting that you just go and play things like risky when it comes to investing, right? What we're advocating is that you build up such a strong financial foundation so that you basically make yourself safe regardless of what happens in the market, stock market, crypto market, all that kind of stuff, right? To where you could put money into a project and literally not care what happens to it, which allows you to fund into multiple different things, like 10 different things, and you only need one thing to become a winner for it to truly, you know, out-earn everything else, right? To really like make up the losses from the other 9 projects that you put money into. But again, even if all 10 lost, it would not affect your life. And that's the point that we're making. You want to get yourself into that position to where you could just toss money at different things and see what works. But you have to get yourself into the position first before you go and do something like that. So if you want to learn to get out of debt, go to 14bucks.com.